Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you all having absolutely amazing starts to your week. In today's video, we are doing a comprehensive macro and short-term analysis discussing Bitcoin, the total cryptocurrency market cap, and of course, the total altcoin market. We'll be discussing the recent weekly candle close, the current levels of resistance on the total market cap, and the recent breakout of the daily downtrend, resulting in a move closing in on 120,000. Before we go ahead and get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. If that is the kind of content you are interested in, you can join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in joining our VIP channel, you can do that by clicking the pinned comment of the free channel, contacting our admin, or checking out our 54+ month trading track record, or even a 10-minute video showing you inside the channel. Go ahead and check it out and let's jump on in. So over the past 24 hours, we have seen a pretty solid breakout here for Bitcoin on this daily downtrend. Now, a few days ago, we saw the breakout of the RSI for this respective downtrend. Again, the momentum is always going to be leading for the price action. We saw a retest of this RSI trend line, and then we saw the breakout of the price action Bitcoin. Now, as we mentioned in yesterday's video, we said that we had a 5-day window before we saw a directional move either toward the upside, breaking the downtrend, or toward the downside, breaking that multi-month uptrend. We have seen now the break of this daily downtrend, which is going to facilitate a continuation, hopefully, into that range high at 120,000. So it does look good. It looks ready for continuations into this next level of resistance, as we are now breaking through the POC. We have broken the daily downtrend, the RSI, and of course we have broken the downtrend on this daily chart. We'll be discussing what happens next, where the key resistances are, and what our next targets will be in the video today. We'll also be taking a look at the weekly close for both Bitcoin and the total cryptocurrency market cap, because although Bitcoin had a nice move up, the total cryptocurrency market cap, although had a good move up, didn't close above that $3.95 trillion level. We closed just shy. And of course, the altcoin market as well, rejecting from 1.06 trillion again. Let's jump over to the market data. We'll come back to all of this. The market data, 24-hour volume, 299 billion. Actually, you know what? Let's just go ahead and refresh this page. I think it might be a little bit up to date, or not up to date. No, it is up to date. 295 billion. This is down 1.35%. Liquidations down 28%, 291 million. And of the 291 million, a pretty even cut here between longs and shorts. Still Ethereum leading the pack with total liquidations for the market. Moving over to the DXY, a bit of a downward move here on the daily, moving into the weekly close. Again, we are still holding above the short-term diagonal uptrend. Provided we sustain above here, we could see moves back to 100, but again, that is going to be unlikely. The most likely direction is still going to be downward into 92 to 93, and we should see the next leg down when this weekly uptrend is going to be broken. Now, depending on how we see interest rates develop, of course, as you know, when we're looking at the macro expectations for the dollar, and of course for interest rates, we know already that the flow chart of here represents that falling interest rates results in a weakening dollar, of course results in available household cash flow increasing, debt to service ratios decreasing, facilitates spending on assets for both the retail and acquiring cheaper debt for companies to purchase income producing assets. So this whole mechanism mechanism goes to bolster the risk asset market over a long period of time. However, the market front runs this mechanism, and that is why ever since we've heard discussions for interest rate reductions going all the way back to mid-2023, we have seen the markets aggressively rally for the last year and a half in anticipation of interest rate reductions, which have hardly even really got going yet. Now, whether or not the interest rate reductions may act as a sold news event, that is something we can discuss later on, because there have been instances where we have seen that. But overall, it is still going to be a bullish narrative for the market, regardless of whether or not the market responds bullish when it actually occurs. When we're taking a look at the S&P 500, the S&P 500 is still looking good. Again, the key levels we are watching are going to be our volatility readings, so our 50 EMA here, and of course our prior levels of support. We need to hold above this level of support at 6,250. Provided we hold that support, we expect continuations. If we break this support, we will then expect corrections potentially to the 200 moving average. A good thing I like to do when we are in aggressive trends, I like to flip the chart and just look at key levels of resistance, which are actually support, where if broken, my bias would flip. So we have been in this downtrend for quite some time now. We have developed this horizontal neckline of resistance. If the price were to push back above here and flip it as support, I would then expect the price to continue upwards into these next levels of liquidity. So again, flipping it back to the normal regular chart, that is what that move would look like. So sometimes just by flipping the chart, we can change our biases based on what the price is looking like. And I would say that if you do change your bias based on what the price is looking like, you know you have some degree of subconscious bias based on the price development, okay? If you are objective, your expectations should remain the same no matter which way you are looking at the chart, because you are not basing your expectations on how things look, you are basing your expectations on how things are developing. So, in essence, this is a horizontal support. We hold above. We are okay, we are solid, we are expecting continuations higher. We drop below, that is going to be the trigger for corrections. Let's go ahead and jump into Bitcoin. Now, before we do, make sure to go ahead and sign up to BitGet, BitUnix, and BingX. The exchange links are down below. You'll go ahead and get access to a whole variety of bonus exclusive sign-up rewards. All the campaigns we run on this channel, you get a lifetime trading fee discount of 15%, which can build up to 45%. You'll also go to support me making this content, and you'll support yourself on your trading journey. So the best way to support me on this channel and the best way to support me making this content is doing that. Of course, go ahead and check it out. We'll play an ad and we'll get right back into it. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's get back into it. We want to start on the weekly chart, the bigger picture, then zoom on into the smaller time frame. First and foremost, the total altcoin and total cryptocurrency market cap. The weekly candle has just occurred for the total market cap and for Bitcoin. Now, we have seen a very solid weekly move for the total market cap here. Now, this was by no means a small move. We saw a move from around 3.56 up to 3.95. So 0.4 trillion, $400 billion increase in a week here for the total cryptocurrency market cap. But most importantly, it was the point which we bounced from, which is significant, which is the prior weekly range high here at 3.63 trillion, holding above that point and bouncing, actually engulfing the prior red candle, showing significant buying pressure here, resulting in a very solid weekly candle close. Now, as we know, the $3.63 trillion level is the bearish trigger point. So if at any point we drop back below there, we are going to be in trouble for corrections. Of course, that level does line up with the monthly uptrend, which is again from this 2.32 trillion low into the 3 trillion bounce, expanding upwards. This is the trajectory of the trend. So at some point, this trend line will break. Whether or not we see continuation upwards and then we come back down and retest it, or even we just come down again and retest it and break, at some point this trend line will break. And when it does, that is going to not only likely mark the top, in my opinion, but it also will mark the reversal point where we then enter a downtrend. So the trend is your friend until it ends. The trajectory of the trend is upwards. At the moment, the total cryptocurrency market cap is on an upward trajectory and an upward trend, and that is expected while this trend line holds. Looking at the weekly candle itself was fantastic. The closing price was just underneath the level we are watching for direct continuations. And again, as we mentioned already, for us to really get above this level, we do need to see Bitcoin above 120, and Bitcoin is just under 120. So it makes sense that we didn't close above that key level. The key level was going to be this point at 3.95 trillion. You can see we closed around 3.92 to 3.93, just underneath. Again, when this point breaks, I do expect just green candles up into the 4 trillion, potentially a little bit higher from there. So this is a key trigger point. We are watching again, breaking through this point. We need to see Bitcoin above 120,000, meaning we need to see Bitcoin at least retest and break 120, and that will facilitate this move, as well as facilitate the move above 1.06 trillion for altcoins. As we can see, the 1.06 trillion rejection point lined up with this weekly close on the total. So we have confluence between the charts here on all of these key levels. Essentially, every chart here is at or very close to retesting a level of significance on the higher time frame. Let's jump over to the Bitcoin weekly chart, and then we'll come to the altcoin. So the weekly chart for Bitcoin, again, very good move up for the weekly. In fact, we saw a very strong bounce. You can see the weekly chart here, bouncing from this diagonal trend perfectly and coming back into this weekly range high again, nearly pushing above. We do need to clear that 120 level to be up into price discovery almost on the weekly in terms of weekly candles. Of course, the highest weekly close we have had, it was sitting at around 119,416. We are currently sitting around about $200 sub that at the moment. So a weekly close into and above 120 will very likely facilitate continuations into new all-time highs for Bitcoin, which we did mention in yesterday's video. So we'll come back to this in just a moment, but let's just go over to the altcoin market really quickly and then come to Bitcoin. So the altcoin market, again, is at a very important level of resistance. If we move to the weekly chart, we can see already that we have had numerous retests of this 1.06 trillion level, and we've had equally numerous wicks above, only to then close below. So we've seen a lot of volatility occur above this level of resistance, which is a good indication that if we break above, we would expect volatility to pick up. But we are watching for the close above to be really confident that the altcoin market is going to catch a strong rotation from Bitcoin, and we're going to see a lot of money flow into altcoins. If we look at Bitcoin dominance, guys, it has been falling, right? Bitcoin dominance has just closed a weekly underneath the 50 EMA. Now, this is pretty important because the last time we closed a weekly under the 50 EMA, we actually just went directly back upwards. But at the moment, the market is positioned not for rejections, but for continuations, provided 120 breaks. So we could actually see, for the first time in 2 years, Bitcoin dominance come lower and lower, particularly if the total market cap breaks through and the total altcoin market cap breaks through 1.6, we would likely see the next leg down for Bitcoin dominance, the next leg up for the total market cap, and that would push the altcoin market aggressively into 1.16 trillion, which is essentially the next leg up for the total altcoin market cap. When we're going over to that daily chart really quickly, let's just zoom back to the daily, we do need to hold above a few levels. Again, the most important level we're watching is the $1 trillion level and the baseline. They line up as a point of confluence. Watching that and watching to see how it develops. At the moment, it is looking pretty good. Let's jump over to Bitcoin now. So we talked about the weekly, we talked about the total, we talked about altcoins, we mentioned the bounce from this uptrend, which is very important. Let's just wrap up one more thing on the macro and then jump to the short term. When we're looking at potential next targets for Bitcoin, we have to look at a few things. On the one, we have to look at the current trajectory of the price action. We have to look at ceiling limits of the current trajectory of the price action. And then we have to assign potential key dates where we're going to be, I guess, reviewing where the price could potentially be at based on those levels, based on those dates. And of course, that's going to be our context, our contextual analysis. So yes, you could say Bitcoin's going to 400,000, right? Anyone can throw random numbers out there, 200,000, 150,000, anyone can just throw a random number out there. And although, you could be right in 20 years from now, the reality is random numbers aren't actionable, right? They mean nothing to anyone, really. It's just a random number. You have to apply context, and you have to apply, well, when you're looking at setting goals, even when you're looking at setting goals, a lot of people will remember the SMARTer acronym. So specific, measurable, realistic, time frame orientated. It goes on and on and on. The same thing comes when you're looking at trading and setting projections. They have to be measurable, they have to be realistic, they have to be within a time frame, they have to be achievable, okay? And they have to be measurable to some degree. So when we're looking at setting context, such as the 6th of October for the 4-year cycle, that is going to set a time frame. It is going to be measurable, it is going to be achievable, it is going to be realistic based on historical data. And we can actually measure how the price action will go based on current trajectories into those points to then come to logical targets. And some people might hear these targets and say, wow, whoa, those are so low, we're going to go 400 times higher. And yeah, sure, you can think that, but it's not measurable, it's not realistic, it's hardly achievable, it's got no time frame. It becomes an unrealistic expectation, and these unrealistic expectations just go to damage you and your profits. They don't go to help you, they go to actually negatively impact you. So when we're looking at this, these targets may not come to fruition, they may completely be incorrect. We may go past them, we may not even reach them. But again, they are just hypothetical targets based on what the price action is doing. And if we see what it is doing continue into these dates, it is expected we reach some of these levels. The levels being 131, 137, 144. Again, we are taking the uptrending diagonal resistance to the ceiling limit, okay? This is a resistance point. We wouldn't expect under normal market conditions for this uptrending resistance to break. It can break, but it would be the least likely scenario. We then have our uptrending diagonal support. Again, assuming we do not break down from this support into these dates, we could see the maximum price target of 134 to 144,000. That is assuming we do not break down this trend. Hypothetically, we could see a move upwards only to break down earlier, and we would not even reach these potential targets. But it is a hypothetical maximal target. This is the max target we would expect if everything plays out absolutely perfectly for the next leg upwards, okay? The maximum expected target. Yes, we could go higher, but it would not be reasonable or realistic to assume that within the time frame, okay, we are assessing. So that comes back to that SMARTer acronym, right? Time frame, measurable, realistic. Okay, let's jump over to our short term now. So we mentioned already, for Bitcoin to remain bullish, we need to remain above the monthly uptrend. And that we've said that for the total cryptocurrency market cap as well, right? We told you we hold above here, we're in a macro upward trajectory. The same goes for Bitcoin. At some point, this diagonal trend line will break. It is an inevitability. We're not just going to see parabolic growth indefinitely. Whether or not we come back to retest it in 4 weeks, 8 weeks, 12 weeks, 50 weeks, at some point we're going to retest and break this trend. And when that happens, that will be the trigger for a shift in the trajectory of the market, and we'll be expecting corrections from that point, okay? So now that is out of the way, let's talk about what is happening on the short term. Bitcoin has seen a fantastic breakout of this horizontal, or should I say this downward diagonal resistance that we've been developing for the last couple of weeks. We have broken out, and we have broken out on the RSI on the daily, as we showed you at the start of the video. We've also broken above the POC, and we're moving into 120. 120 is by all means a very important level of resistance, as we've gone to show you. The total market cap at resistance, the total altcoin market at resistance on both the short term and the weekly for both of these charts. The key determining factor of whether or not these charts break upwards is going to be whether or not Bitcoin breaks through 120. So 120 is not just a big chart for Bitcoin, it's a big chart for the entirety of the cryptocurrency market. If we break above 120, we will very likely see a strong move toward the upside into new highs. Taking a look at the VRPV over here, we can see we have already pushed up the POC. So we're going to see some more buying volatility into 120. It's highly likely we come back to retest 120. Highly likely we retest 120. The break of 120, we're watching for support resistance flips. Going back to prior horizontal ranges, we had a very clear horizontal range over here. Let's just go ahead and draw it in. This was our horizontal range. Horizontal consolidation, a breakout, a retest triggered the next leg up. We're looking for the same reaction in price action at 120. We're looking for either a clean break with strong volatility and a strong high close, or we're watching for rejections and retest back of 120 before we see those legs up. Either way, we enter a low historical resistance range. We've seen volatility in this range before, where we would expect volatile and violent price action. So, potential targets for the breakout, we are looking at, again, buyer side liquidity, 122.7 to 123.3. We are looking higher above there, psychological levels, 125. Then we move into these targets here. Okay, that is what we were expecting. Again, if at any point this trend line breaks, that is going to be the trigger. Bitcoin is going to be going lower. And if we're looking at macro trigger points for, when Bitcoin's going to be wrecked, okay? We're talking about bear market level wrecked. We need it. I'm typing in bear market, but I'm thinking of a different thing. I want to bring up the Gaussian channel. We're looking at something like the weekly Gaussian channel, right? If we look at the weekly Gaussian channel, generally when we enter on the weekly, we see macro corrections into the 200 moving average or below. So we're looking at bear markets. We're well beyond the point of which, should I say, we're well away from any potential start of a bear market. But as we know, bear markets don't start at the top. They start after large pullbacks already. So watching this uptrend, if that breaks, we see corrections potentially into this point, which could trigger stronger move down, okay? If we're then looking at something like the weekly chart, and as you guys know already, the weekly chart, particularly the Ichimoku cloud on the weekly, when we're projecting key points, something like the baseline of the Ichimoku cloud, this orange line, has been fantastic at particularly predicting capitulation points. So we can see when we drop below the baseline here, we drop below the baseline here, we drop below the baseline here. We've already had 20, 30, 40% pullbacks, but after that is when we see that 6 months of max fear, where we see that next 60, 70% pullback for the market, where we see mass capitulation. So again, we're well away from the baseline, which means although the top may be coming close, that the capitulation phase or max fear phase is still quite some time away, we do believe, in terms of the 4-year cycle, provided the 4-year cycle even continues, right? There's a chance the 4-year cycle doesn't continue and it does break. Now, there is one more chart I want to take a look at. And this is a very interesting one. Actually, you know what? We're not going to show you this one because it's not applicable at the moment. This one is a particular set of combinations of indicators I've used to predict the exact bottom in all cycles prior, that have bought the exact bottom in all cycles prior, within a 2-week radius. So we'll come back and discuss this, many months from now when it's applicable, when it's relevant, but at the moment, nothing to talk about. Hope you all enjoyed today's video, guys. Hope you learned something. Price action's looking very good. It's looking very interesting. We do like the breakout here. We're looking for 120. We're watching 120 this week. Total market cap's position for a rally. Total altcoin market cap's position to continue. Bitcoin dominance is looking weak. It all rests on Bitcoin here. But again, if we're looking at the probabilities of the weekly with the daily RSI breakout, with the bounce from that uptrend, with the price entering the low historical resistance range above the POC in the short term, it is looking in favor of continuations. Thank you for tuning in. Catch you guys in tomorrow's video. I look forward to seeing you then. Bye.